thanks for joining us. I'm Marlin Bohling. I want to take a quick peek here at our grain trade, and then I want to go to our special guest. Let's go ahead and pull up our corn futures, get you updated on what's going on right now in Chicago. Still two higher on the March now, in fact, 2 1/4 higher at $3.53 per bushel on the soybean trade. Here you have your January 7 1/4 higher, the March up 7 1/2 at 9.69 1/4. In the wheat trade today, we have Chicago March wheat 6 3/4 higher at 4.33 3/4, and that's on the high of the day, I might add. In Kansas City wheat, we have the March contract currently trading at 4.34 3/4. That is now up 7 1/2, and that's on the high of the day. Minneapolis wheat, we have the March contract now at 6.19 3/4. It has flipped back to the plus side by just a couple of ticks. And if you look at the cotton market right now, we have the March contract down 5 points at 78.58 cents per pound. I want to check in. We've found out what conditions are like in the Chicago area this morning. We found out what they're like in Amarillo, Texas. Everybody is below zero. Let's find out what's going on in the East Coast. Let's check in with Ben Hushon of the mill in Whitehall, Maryland, see what conditions are on the eastern part of the U.S. here this morning. What's going on, Ben?
Marlin, we would pretty much say ditto. What Tim Ross is talking about for the rest of the country, we're feeling it too. Since we talked last Tuesday, we have not gone above freezing. In fact, I heard him say this morning we're running about 15 degrees colder than typical for this time of year. So but it's January now, so it's to be expected that winter has come. But it has come fast, from 55-degree days down to 25-degree days. Just seemed like overnight Christmas weekend.
And by the way, Happy New Year to you. So do you have, with all the cold, do you have any snow on the ground to protect any wheat that's out there or not?
Very little. And it depends. If you get up into, we're right on the Mason-Dixon line, Maryland-Pennsylvania line, and we had probably an inch or two, which is just slowly disappearing, even in the frigid temperatures. The power of the sun is causing some of it to disappear. On up in York, Pennsylvania, they were up around 5 inches. So they've got some protection. But where we are, southern York County, northern Harford, Baltimore County, there is basically no protection on the small grain at this point.
All right, so what do you have coming up down the pike? You have some fairly big events while it's cold and frigid out in the field. Farmers kind of tend to head indoors, don't they, this time of year?
Well, they do, or into the shops. And Marlon, I tell you, I had several people over the weekend ask, what are farmers doing? What are your customers doing right now? And we had a real long, drawn-out harvest. They were ready to go the middle of September in their minds and based on previous history, but there was still corn being done here leading right up to Christmas time. Some odds and ends, but a very, very long drawn out. So the first thing they do is take a little bit of a mental break. But now we encourage them to get, they did some soil samples. Now that we have the freeze here, it's time to sit down, bring in your trusted advisor, go to look over some yield maps and soil test results, and also look in the paper and check around with, again, your trusted advisor. See what meetings you can go to your normal dealer that you're working with, and maybe some extension meetings. And just open your eyes and ears to potentially a new way or something new or different you could add to make your farm more profitable next year.
And Ben, I know you have an upcoming Keystone Farm Show. I wish we had time to cover that event this time around, but I'm looking forward to chatting with you next week about that. Ben Hushon is with the mill. He's based in Whitehall, Maryland, and there's a look at the Keystone Farm Show for our viewers. That'll be January 9th through the 11th, so we'll get more information on that next week. Ben Hushon of the mill, and we'll come back and take a look at what's going on in our livestock trade on the other side of this break. Come on back. March dollar index futures now down 190 points this morning in the early going. That's interesting. We need to keep an eye on that. Well below that 92-cent level. Okay, let's take a look at how we are now trading in our futures on the livestock side. And we talked about it earlier, and we can take another look here in a little bit about what the cash cattle trade did as we wrapped up last week. And that all took place after pretty much after everybody had gone home for the weekend, for the holiday weekend. So anyway, the trade that did shake loose late in the day on Friday indicated that we would have a higher open here on the live cattle futures this morning, and indeed we did. We have all futures contracts there over $1 higher. Right now, you have your February coming in there with 122.82 per hundredweight right now, so that is up $1.27 from our close last year. We have the April contract now $1.28 higher at 123.70 per hundredweight. Only 15 cents now off of our high of the day. As it stands right now, we're about 75 cents off our earlier low this morning. And so far, we have that June contract up $1.23, and it now stands at 114.88 per hundredweight. Just a dime now from its high of the day. If you look at the live cattle chart, we can point this out for our viewers at home. It has been a very choppy affair as we headed into the end of the year, and analysts were wondering just exactly where it would go as we start out a new calendar period here. And you can tell from the high to the low, if you go back about the last 2.5 months or so, it is kind of in that retracement level there, and they were wondering which way it would tend to go, if it would prove out to be overhead resistance or if it would bust through. Well, today it appears that they're going to continue higher. Looking now at our feeder cattle trade, let's pull up our feeder futures. And right now, we have that nearby contract on the feeders, which is January, and even $2 higher. We are now trading at 148 even per hundredweight. That's now $1.20 off of our earlier low this morning. We're only 20 cents from our daily high. March feeders coming in at 145.20 right now. That is up $2.52, and we're now within a dime of our high of the day. April up 2.42 right now, quoted at 145.50. I was alluding to the fact that we had the livestock summary from last Friday that took place. The cash cattle trade took place after the markets pretty much were all wrapped up for the year for 2017. And it was significantly higher than the week before. We had cash cattle trade on a live basis from 122 to 123, we understand, out in the plains. That would be about $3 to $4 higher than the previous week. And we have the dress basis sales coming in there late Friday, up as high as 195 per hundredweight. And that would be $4 to $5 higher than the previous week there. Even the cash hogs were higher across the board nationwide on Friday. They were 67 cents higher on a live basis. Carcass basis hogs were up 34 cents. Now to the lean hog futures this morning, with the cattle surging ahead like they are. Lean hogs are not. They cannot follow through in the same way. Some analysts thought we'd see some spillover support. Not the case. We have February lean hogs down 78 cents right now. They're trading at $71 per hundredweight, and even dollar off of its earlier high this morning. And we have the April lean hogs at 75.05, so that would be down 60 cents at 75.05. That is now about 75 cents off our earlier high this morning. The May contract is up one tick, a couple of pennies higher, and it's trading at 80.02. So we have May, June, and July all over $80 at this point. The nearby contract still in the 70s range so far, Janet, and that's how we're opening up.
All right, thanks for the rundown.
There you
Appreciate
go.
it, Marlin.